one rental at a time. It is now officially the second half of 2022. Well, the first half was no fun for lots of us. Hopefully, the second half will be better. If you're interested in real estate investing, I've got great news. The market is going to change. It is going to be very interesting for everybody who is watching their buy box. If you watch your buy box, you might be like the lumberjack. You might be like another follower, Roldan, who have had to adjust their buy box smaller. If you have not watched my deep dive, which is a playlist on this channel, go check out my deep dive on a buy box. It is where everything starts with one rental at a time. As we get started, a couple things you're going to see up here on the my left, your right corner. We're going to count down to 50,000 subs. If you want to be a part of this, just go ahead and hit subs. Why we're going to do this? Because I'm going to be spending some money when we get to 50,000, and I know all of you watching this want to see me spend some money. So thank you very much. We are now over 34,000 on our march to 50,000, at which point I'm going to spend 10 grand on a party. We'll see who can make it. It should be a lot of fun. As we are talking about July, remember July 20th is a date that I think the real estate environment will fundamentally change. It's the day National Association of Realtors puts out their report for June. We have already started to get little drips of June data. I've already seen some realtors talk about Dallas, in Phoenix, in Huntsville. All of this data is going to start to seep into the system, and it will all come to a head on July 20th. For example, very early June housing data. I got this off of Twitter. I should have wrote down the person's name. It doesn't look like I did. I will do better. I will give credit where credit is due next time. I'm actually going to go find that and call them out tomorrow. First, active listings for June up 19%, right? You could think of this as supply of homes. Undoubtedly, a lot of that is FOMO, but still, it all starts somewhere. Active listings up 19%. Next, any guess on what median price is? Lots of people are calling for a crash this summer. As I have said many times, we will have a crash in transactions. I now believe we will have a recession this year, which I was wrong on. I thought originally it was next year. I believe Q3 and Q4 will be a real estate-based recession. Think about that. Real estate, 14% of the U.S. economy's GDP is going to go into nuclear winter. Transactions are going to crash. However, median price, technically median list price, up 17%. How could that be? How could list prices go up? Well, wish pricing, first and foremost. Second, as I have said repeatedly, and a lot of you don't hear me, median home price has as much to do with mix as price. Why did median list price go up? Quite simply, the share of expensive homes exceeds first-time buyers. Why? Move-up buyers dead. No inventory being built. The median price will skew higher. The median price now is $450,000. We could do half the transactions, and median home price for the nation can still go up. That is what I've been calling. It's not fun to say, but remember, national median home price means stuff to only economists. It should mean almost nothing to all of you. All of you need a buy box. You need your criteria. You need to find your motivated seller. But yes, as I have shared, and lots of you are angry, frankly, I read your comments, are angry that I am not willing to say that we are going to have a pricing crash in 2022. I don't see it. Housing moves slower. Yes, I know Reventure Consulting is yet again calling a crash. Stop telling me. I get it. I understand what he's calling. I do not see it in 2022. It now takes the average American 31.5% of their wage to buy the average home. And if you don't know, most lenders cap out at 28%. This is why housing is unaffordable. This is why the low end is going to skew median home price. Because again, we're just simply going to have less transactions at the low end. And then finally, rents. I believe rents on single family homes, specifically single family homes, will continue to be hot. I believe rents in apartments or multifamily soften, are at least flat, if not down. I believe what is going on in the apartment market is not healthy, and likely we'll see some softness in a recession. Some of the early data, I went scouring for June data. Again, it's very, very early. This all comes to fruition July 20th. Austin, Texas, hot markets. Listings are up 144.5% year on year. They talked about an example of an open house last weekend listed at $825. 0 people showed up. They lowered the price on Sunday to $790. It is now in contract at $760. Lots of you will say, look at that. That's a price drop of $65,000. Well, folks, that's not how it works. How do you know what the real value is? $825 was clearly wish pricing. I would guess that home probably sold in the low 600s last year. So still 10, 15% price appreciation. So again, very early data. I'm looking for it. I'll look for it all weekend. We are going to get dribs and drabs from cities and maybe even states, but this all comes to bear July 20th. Next up, how would you like to be a company that's worth $4.8 billion? Think about that. $4.8 billion. That you are forced to sell yourself for $25 million. Yeah, it appears that is what's happening to BlockFi. BlockFi was valued at the last private round at $4.8 billion. Because the tide went out in crypto, we now see that BlockFi is swimming naked, to keep on with the Warren Buffett statement. Remember, when the tide goes out, we are going to find people that you thought were untouchable to actually be swimming naked. I would say a company worth $4.8 billion 60 days ago that sells itself for $25 million or a 99 point something discount is naked. More to come. Got some more earnings pre-announcements. Not as many as I expected, but again, here's a hint. This ought to be interesting. Talk about calling something early. I don't know if you know this, but it is pretty common for companies to release negative information Friday afternoon. Now, why would they do that? Well, obviously, at least for the stock market, it's closed Saturday and Sunday. Now, if you release negative earnings or a pre-announcement Friday afternoon today, or maybe over the weekend, you also have Monday off. I believe Monday is a national holiday for July 4th. So if you release negative earnings today after hours, you can have 3 days before the stock market is open. So I wonder if anybody releases after hours today. That ought to be interesting. But we had Micron. Micron is out saying, folks, the heyday of chips over. Cell phones going down 5%, PCs going down 10%. Think about all the people that bought $1,000 phones with their stimmy checks. Think about all the people that bought computers for stay at home, for school, for all of that. We pulled, certainly for PCs, we pulled forward all that demand. For iPhones, maybe we had some stimulus ballers buying phones that maybe they normally wouldn't. So again, Micron. Meta, Facebook sent out this message that basically we are slashing hiring plans by 30%. We are bracing for a deep economic downturn. And Mark Zuckerberg says this might be the worst downturn in recent history. Yeah, I think you're right, Mark. I think you're right. And then finally, I didn't write, Kohl's. Kohl's was selling itself. I don't know if you know this. They've had to call it off because, frankly, the value of Kohl's is falling off a cliff. They had to cut earnings. They have ended talks, and they've said that the current quarter will be worse. Excuse me, my throat. Worse than expected because consumer spending is falling. And then finally, General Motors. General Motors has produced 95,000 cars, almost. Apparently, they have 95,000 cars sitting at different lots, missing a few select components. Yeah, that inventory cost is going to be nasty at General Motors, right? Usually that inventory would be come off and sold to a car lot, but they're going to carry that entire car on their balance sheet as inventory, perhaps work in process. 95,000 cars, almost done. Whew, not good, not good. Don't know if you saw this, but the 10-year note is under 3%, and last time I checked, under 2.9%. I can't explain it. The only thing I could think of is more and more of us believe a recession is coming, a deep, dark recession, and more people think we are in a recession. More on that in a minute. Oh, I almost forgot. We have now scheduled our next deep dive. We are going to do a deep dive on cost segregation and bonus depreciation. I just did a video that was released yesterday, sparked lots of questions. So as I usually do, when all of you kind of have questions around the topic, we are going to bring on an expert and we're going to go for 60 or 90 minutes answering all of your questions. As always, we do this with my students first. That way I can control who's in it, and then we upload it to YouTube later. There's a playlist here called Deep Dive. So if you've ever thought about understanding real estate investing, buy box, yield, all of those, buy the course. You will be invited to Saturday, July 9th, 9 a.m. Pacific. Again, we will go 60 or 90 minutes. I'm not sure what this one will be. It might be 90 minutes. But again, this is all for you, trying to get back, trying to help you take the next step. I know lots of you have questions. I will bring on David, who was in the interview. 2 more videos coming. Cost segregation is what the rich use. Bonus depreciation is what the rich use. It is something that you can use if you understand it. So again, we will do a full deep dive, answer any and all of your questions, July 9th, 9 a.m. If you don't have the course yet and you want to be on the call, buy it, join the group. Let's go. Now for a recession. Yesterday, I put out a video where the thumbnail said I was wrong. That was a discussion between Matt and I, basically giving Dion credit for being right. We said Dion of the 3 of us called for a recession the earliest, and I said Dion is likely going to be right. In that video, you heard me kind of hem and haw about Q2. I still believe that Q2 will eke out a very, very slight positive number. Frankly, it doesn't matter. It doesn't matter. I think Q3 and Q4 of this year are going to be a recession, and it's going to be real estate based, right? We are going to see transactions roll over, commissions down, inspections, all of these other things. We are going to have a recession this year. I think it will be led by the real estate or housing market. Yes, folks, I understand that the Atlanta Fed has now gone from 0% Q2 GDP to negative 1%. If it happens, I will freely give credit. Hopefully by now, when I'm wrong, I admit it. Hopefully you've learned that. I still don't believe that Q2 will be a negative number. I think it will be very, very slight, like 0.1, 0.2 positive, but it doesn't matter. The recession is here, consumer spending, the real estate market is just going to suck cash out of the system. I believe Q3, Q4, without question, is negative. So it is possible, if the Atlanta Fed is right, that we have 4 quarters of negative GDP growth. Q1, 1.6 in the books. Q2, maybe. Q3, Q4, I think Dion is absolutely right. So again, when I'm wrong, I admit it. I don't hide anything, and I don't delete videos. There are plenty of people who called crashes in 2020 and 2021, they delete videos so they don't look stupid. I don't delete videos. I just create the next one. So I don't know why I get so much hate for that. What else do we got? Open Door. I got some data from Arizona. Again, remember, I'm looking for data because I think July 20th is the big date. Open Door has 9% of all the active listings in Phoenix, and they only have 3% of the closed sales. I think there is no question that Open Door is about to go kaput. I think they're going to go out the way of Zillow. They don't know what they're doing. They are overpaying. It's not good. They have 1,254 active listings today. Their old record for active listings was 638. So almost double. Almost double. What else do we got? We got that. Oh, the last thing I will close on, again, what are millionaires doing today? There was a survey done by CNBC. Millionaires are doing 3 things. 1, they are not rushing. Remember, we have talked about this a couple of times in the last week. There are 3 steps to a bottoming cycle, at least in the stock market. Step 1, we're almost done with. Multiple compression. Step 2, earnings cuts. We have not even started it. We just had Micron, Medic, Kohl's, GM. I think we had 1 or 2 yesterday. It is just starting. Earnings cuts is still ahead of us, and that pain will be as bad as margin compression. And then don't forget the third phase. Lots of you who've only experienced the last 3 or 4 years have only experienced with a true V. It is not uncommon to have the third step be quarters on the bottom. The bottom, you don't just bounce off the bottom. You need to build that foundation. So again, millionaires are being patient. They have their buying list, but they are not jumping in. Number 2, they are reducing exposure to non-profitable growth. Have you seen the growth stocks that have great revenue and no profit? They have dumped those stocks. And then finally, they are keeping cash handy and adding to cash, right? They believe that cash is an opportunity on future deals. Cash is not trash. So again, folks, what we have coming up for you, giving another 90 minutes probably on July 9th. We are going to go deep with my students. How to use bonus depreciation, cost segregation, how to use something that the rich have done. As I shared yesterday, this is something I did last year on a duplex. It saved me almost $10,000 in cold hard cash. So we will talk about that. Lots of questions. Some can use it, some can't. Carry over, all of those things. If you're a student, make sure you join. I will again create a Zoom meeting. I will post it in our Facebook group, and I will send it via Teachable. That will happen today or tomorrow. So again, lots of stuff. I think we have a recession certainly in the second half. Talk about swimming naked. BlockFi, 4.8 billion sold for 25. Woo, that's a haircut. And then again, we've seen early June housing data. If you get any June housing data for your area or your state, please send it to me. I think July 20th is going to be the big, big day. But some of you will see data early. So take care of yourself. Happy Friday. It is July 1st. If it's a 3-day weekend for you, I hope you have a blast. If you're taking today off, I hope you have a great 4-day weekend. Take care of yourself. We have Stephen Dow from Velocity Mortgage next. Thanks, guys. Bye.